Hi everyone, this is Larry, and today we are going to talk about the things that you want to know before you do any stock investing. Nowadays, a lot of individual stock investors are pouring their hard-earned monies into the stock market, and without knowing what they are doing. So I hope this video can help a little bit for the individual investors that they just started to know what they are about to get into. So today, the stock market is the volatility and the risk has been playing a greater role, and we have seen a lot of up and down in a very short time. So this kind of scares people, but also created a lot of opportunities, and that's why a lot of individual investors now want to jump into the stock market. And before we want to jump in there, so I like to bring about the goals of your investment. So I like to help us together define the goal of our investment first. So there are some investors, they are they are looking for capital gains. So they are looking for appreciation of stocks, and the others are looking for incomes, so dividends. So these are two different type of investors, and we want to know what type of investors that you are actually are before you trying to pouring your money into the market. And we also wanted to know that you also wanted to know that the market, you can lose money in the market. So before we're thinking that only we are gonna gain money in the market, we can also lose money in the market. So we need to be aware of that, and we're not going to make that unless we are professionals. We're not going to make that our mainstream of income. But stock investing can be a great cornerstone for many of us to do our passive wealth building, and it has been proven to be very effective for many people. And we all hope to gain from the stock market, and also this will become a very rewarding experience as well. So first we want to know that how much free cash flow you have. You wanted to, before you do any investing, you want to pay off your credit cards, and also pay off your student loans. Things like these are the first things you want to take care of before you want to invest. And also you want to have an emergency deposit, a 6-month emergency deposit, so that beside all the debts that you have some free some free cash flow, and you have some deposit that you can invest, and without worry about taking that out within the next 2 to 3 years or something. That's something that you want to calculate before you taking any stock trading activities. And we also want to do our own due diligence on stock research. So we want to do our own research. If your friends telling you that a stock is a great buy and you should buy it, before you jump right in to buy it, do some research to see if that business is profitable, and if that worth your hard-earned money. Just like you buying anything from Amazon, from Amazon.com, that you want to look at the reviews, you want to check out the other similar product and compare them side by side, and then choose the best one that you think have the decent price, and also have the same value that can bring to your table. And after that, we also wanted to understand the how the big pictures that play in stock investing. So some of the geopolitics nowadays can do a great can shifting the invest environment in a great extent. So we want to make sure that we understand these risks before we jumping into the stock market. And we also want to start small. We don't want to so when you choose stocks that you want to invest in, you start small. You don't want to just dump all your money in one setting. You wanted to dollar averaging cost, and also start from small quantities, and then and the monitoring. When you do your homework, you want the monitoring, and you wanted to track this stock before you already wanted to buy it, and also after you buy, you also have to stay informed of any news and anything that can affect the industry as well, and any news of the companies, like their financial reports every quarterly, and any geopolitics that can happen to the company that can affecting your share price of that stocks. And one thing that I like to do also is that look at the insider tradings before you also buying into a company. You wanted to make sure that the insiders also doing what they said. If they're saying they are having a good company, they are not selling the company stocks secretly, or just after the second day they said so, after the stock price goes up. So we want to make sure that the insiders doing what they are saying they are gonna do. And yeah, now let's just think about the companies that you invest. And there are a lot of companies out there, and you want to know the risk you are getting into, and the possibility of the volatility that you might involve in. Sometimes really depends on the size of the company. So if it's the size of company, the market value of the company is usually defined by the market cap, which is their outstanding numbers of shares times their share price of 1 unit, and that give you the market cap of a company. And if that value is below $250 million, that's usually a micro cap. That's a very small company that stock price can be very volatile, and a lot of risk involved in there. And a small cap would be around a small cap would be below 1 billion, so it'd be $250 million to $1 billion. And these categories usually have potential higher growth rate, but then they also have a lot of risk involved in there. The mid cap is where many investors find it very attractive. It's usually around 1 billion to 10 billion. So many investors find a balance of the mid cap because they have less risk than the small cap, but then they also have the potential growth rate that the mid cap can have. And above 1 billion to 50 billion, that usually is defined as the large cap. The large cap company is usually for some of the conservative investors, and because they are a lot more stable than the others. And anything above 50 billion in market cap is a mega cap or ultra cap, they call it. Something like Apple, Google, these are the ultra cap companies, and they are much more stable than the others as well. And besides the risk, the risk involved in these, so besides the size of the company can affecting the risk, there are also the timing of the buying is also very important. You wanna to, there's a signal that something, when you follow a company, that you wanted to take potential, uh, carefully listen towards like overbought or oversold. These are typically signals that can let you decide if you want to purchase a specific stocks or you want to sell at the moment. And besides that, you also want to know that your investment strategies. Some people are short-term investors, some are long-term investors, and you want to define your strategies. And personally, I don't do any. Sometimes I do short-term trading, but usually I do keep my stocks for long term, and because they usually rewards the best. And short term you can have a good rewarding as well, but then you have to really stay on your toes and then really do your due diligence and checking the stock markets usually daily. And so I would suggest that people starting with long-term investing in their mind. But it can be either. Depends on what the type of people you are. Some people just cannot hold stock for over a week or a month. They want to take that profit off the table, or they want to cut the loss right away. So it's all depends. Also, the tax. Do know your tax brackets before you invest. So if you selling anything and taking profit off the table within a year of buying the stock, that usually you will have to pay the short-term investing tax on the stock on the profit that you're gaining. The short-term investing gains are usually taxed at your as your ordinary income. And if you're selling a stock that is over 1 year, then you will have to pay the long term. Then you can only pay the long term investing tax bracket on the stocks that you're selling within after longer than 1 year. On the profit that you make with the stock that you're selling after you keep the stock for more than 1 year and you sell the stocks. And please remember to click the thumb up button, and if you like this video, and please share it and leave a comment below and see what you would like me to talk about in the next videos, and see you around. Thank you.